So this is the model we're going to build. Unlike Maya, you'll find that this model is going to be a lot more fun. And just like Maya, right, we are going to first build the model, update it, and then we will build data tables on the side, which we haven't in this specific case. Let me see data. Yeah, there we go. That's the. So you've got the simplified model, which is business as usual, and then you've got the simplified model, which is the Nightmare on Elm Street version, right? So in the Nightmare on Elm Street version, we have data tables that we've used for calculating and looking at a couple of components and numbers and addresses, and then you've got the main model here, and this model has a couple of pieces, couple of design components, right, that we'll discuss in a little bit more detail. How do we get to this model? We get to this model by starting here. So I've shared this model for you as a reference. You can take a look at it, you can play with it, you can sort of spend time with it. But when we start off, we will start off with GEMS version, let me see, where is it? 6.4 simplified. That's where we'll start. So this is the incomplete model. This is the model that doesn't have anything on this side. Okay, we'll essentially go from here to here. All right, so now I think I'm going to give you a couple of choices, and I want you to this is important because, you know, as I said, as I always say, much more than the mechanics, the thinking, the thought process, the objective, the questions are really important, right? There are three questions we have to answer. The first question is from the perspective of the bank, pay us back. Second question is from the perspective and the point of view of the owners and the shareholders, and that is how much cash do we need. The third question is from the point of view and perspective of the investors. How much is it worth? What's the value, right? As these are three questions that we want to answer. Now from a driver, so here the focus is on downside. Here the focus is on what are my growth plans and how does that translate. And you saw, you know, when you looked at Maya, you could see when you reduce the growth outlook, the cash burn came down. If you have a higher growth outlook, you need more cash. So growth plans are directly linked to cash requirements. What are my cash requirements? What are likely to be my cash requirements so that I can figure out the financing part. So that's the owner part. The investor part is a mix of growth, fair value, and metrics and benchmarks. Okay. So whatever model we build needs to cover all three parts because we need to answer all three questions from our perspective, from our point of view for GEMS. So on the driving side, we have a couple of drivers. So first driver, second driver, and third driver. The first driver, so option one, let's look at option A. So option A. Option A is it's students times fees per student, right, times expense per student, and that'll give us our margin. Bring it back. That's your output. And let's call this model A, right? This is a model that says students, fees per student, expense per student, and margin. What other models are possible? You've done one, right? You came back with one. What other models are possible? Take a look at the sheet. Open the sheet and see what else have we done in the sheet. Let's look at option number B. Option number B is you say I have number of schools, and I have revenue per school, and I have expense per school, and that gives you my margin. And here, you know, the underlying assumption is that this revenue per school and margin per school is also linked somehow to students per school. So this becomes option number B. Then let's look at option number C. Option number C is a utilization model, right? What's the utilization model? What's my capacity as a school, as a system? What percentage of that capacity is utilized? And then based on that, you know, I've got some revenue slash expense, which sort of goes up and down depending on my utilization, and that also gives you my margin. Do you guys see a trend? So with respect to the model, with respect to the design that we're looking at and discussing and evaluating, do you see a pattern? If you build a zoomed out model, if you build a high level model, you're going to run into a few challenges. And those challenges are that, if you remember with Maya, what we really wanted to do was we wanted to do some really in-depth and detailed scenario analysis. Right? So to do this right, to do this well, to do this correctly, we need the flexibility to try out different models, different scenarios. And one of the issues you're going to face when you build the model, especially if you see historical model that we built for GEMS, you will see that flexibility is going to be a function of, so you know, when you do students, you sort of married to the student model. When you do schools, you're married to the schools model, right? When you do capacity, you've got other challenges. So maybe you need an option D, and that option D is a hybrid model. And that hybrid model makes it possible for you to be flexible. Because if you think in terms of what are you modeling? You're modeling top line, and top line is linked to students. So when I say top line, I basically mean, you know, you're modeling revenues, and revenues are linked to students, right? And then you're modeling expenses. But expenses are linked to not students, they're linked to staff, and staffs are linked to schools. So maybe you want a model where the revenues come from students. So model D, which is a hybrid model, revenues come from students and expenses come from staff and school. When you look at the sheet actually has three models. So there is decline, there is growth, there is model A, there is model B, there's model C. So we have historical data for 2018, 17, 16, 15, and so on and so forth. But there are three models here, A, B, and C. So if somebody gave me the model and said, okay, which model is it? Your first step is, you know, this command, formulas, trace, precedent, this is your best friend when it comes to decoding, debugging, sorting, and solving Excel models. This needs to be like second nature as far as its usage and practice is concerned, right? So what we do is we simply go down, all the way down. Oh, it says model A, B, and C, right? It says utilization, students, and schools. But how do we know that for a fact? So you look at gross revenue, which is your top line revenue, and you see where that comes from. And if you do a search formula and trace, it tells you utilization is a function of, there is a number here, and this number maps to revenue per student, and then it multiplies it to number of enrolled students. Okay, so that's the top line part. And then if you look at the second piece, which is model B, which is students, click on formula, trace, and this is also linked to number of students, right? But there has to be some kind of difference between the two that we'll dig out a little later. And then number 3 is schools, and if you look at schools, click on this, trace, and this goes to a slightly different figure. It looks at schools here and multiplies by revenue by school. All right, now this is schools. Then let's take a look at expenses. So expenses, the big items is staff cost. How are our staff costs calculated? Formulas, remove arrows. If you see the staff cost in the 3 models, this is staff cost per employee from a utilization point of view, and the number of employees, these number of employees come from trace. They come from a growth or a decline rate that has been used on that side. Okay. And then if you look at staff cost in model B formula, this is also staff cost, same numbers, same combination, and then model C, staff cost here. So all 3 of them use cost the same way. All 3 of them use revenues in slightly similar ways, right? So even though it says utilization students and schools, that's actually not true. It's 2 of them are students, 1 of them is school. If they were linked to utilization, they would have used this number. They would have used some figure of this figure, right? Some number of this number. Okay. So now I said utilization was off. I was actually wrong. If I look at it, I wanted to see whether they've used the 78%. So if you look at model A, this number of students, they are using number of students, but these numbers of students are coming from a utilization percentage, which is 78%. So this utilization percent that they have 78% capacity, this number comes from formula trace dependence. Wrong. So this 78 comes from here, and this 78 plugs in there, and that number comes from 145 and this number. Okay, so that's utilization. The utilization is utilization, whereas this one, which is a student link model, basically uses number of students, these enrolled students, times a growth factor. So from our perspective, from our point of view, what we're really trying to do is to make sure that we've modeled it correctly and we've modeled it accurately. Okay. So the first part of our exercise is done. You guys now understand how to decode and work with the model. The second part is for us to extend this model, right? So as part of the extension, what do we want to do? We want to go out and project numbers. So we've got 2009, we've got 18 data, we need 19. Actually, I want to space it out a bit here. So I need 19 data, 2020, and take it all the way out to 2027. So this is year 1, year 2, year 3 of projections on our part. So we're projecting about 9 years of projections, of financial projections. Okay. And in order for us to do this well, for order for us to do this correctly, we need a lot of data. What data do we need? So if you look at this series here, there is actually some key metrics. So I'm going to copy and paste all of these. I'm just going to select these as they are. I'm going to copy and paste them here. In this space, right? So we don't have to look up. So I need these metrics, right? I need some metrics for enrolled students, school capacity, utilization, and employees. The problem is I don't want to use, we've seen that in Maya. I want to use hard-coded values. I actually want a driver that gives me the number of schools, the number of students, the capacity, the utilization, and the employees. I don't want to put in hard-coded values. So how do I get that? That I get based on the model variation I've used. The design, the question I was asking, what do you think drives the number of students? So if you think in terms of, remember, what is the question you're trying to ask? What is the question you're trying to ask now? You're saying, what are the drivers that would determine number of students in a school at GEMS? And what are the drivers that will determine number of schools in the GEMS school system? That we could sort of model later on for dynamic purposes. So if I come back to my simplified model, I'm saying, okay, I need a few factors, right? What are those factors? The first factor is growth in schools. This could be positive or negative. Remember, we're doing both downside and upside. So from a banking point of view, we need to be able to model the fact that there might be a decline in growth. It could be positive or negative. So growth in schools, and then number of students in a school within the GEM school system, right? So that's 2. 3, GEM has different tiers of schools. So they have schools that are in different categories, and each school has a different price level. So for example, I would actually say mix. So I would do student/school mix, and I'd say there is your premium plus, your premium school, and I would say your entry level school. So from a schooling system, from a fee structure point of view, facilities point of view, perception point of view, GEM has 3 categories of schools. There is premium plus, there is premium, and there's entry level, right? Entry level is the cheapest, premium is a little expensive, and premium plus is the most expensive, right? So let's say this would be about 20% of their portfolio. This would be about 30%, 20% of their portfolio, and this would be about 60% of their portfolio. And the reason why we're doing it this way, again, remember, what's the objective? Think in terms of what are you trying to answer. One of the questions you're trying to answer is the downside question. What's the worst that can happen? And in the downside question, in the what's the worst that can happen question, it's not just that schools will reduce, not just that enrollment will reduce, it's also that the product mix may change. And if the product mix changes, then it'll also have an impact, direct impact on your revenue mix. And because you want to model downside, because you want to model upside, because you want to model valuation, because you want to model cash flows, you need to model these 3 things separately. Okay.